To know what to do is not enough. There's so many people who actually know what to do, who have a high enough IQ, who say, yeah, that's right, that is what I should be doing. But when it actually comes to them doing that thing they know to work, they don't. They get scared. Now, they may not say that out loud. They may not even think that. They might say, well, I'm busy. If you ever hear yourself saying out loud to someone, well, I'm busy, and it's in the context of not getting something done, I think it's actually that you're not busy, but that you're scared. And so I was giving a talk yesterday, actually, to a group of people on the diversification myth. And it was funny. 2 people actually said to me, man, this stuff really makes sense, but I'm just so busy right now. And I did not call them out on it, but it sounds legitimate. It sounds legitimate when someone's like, oh, I'm busy. And other people go, yeah, I'm busy too. But just try this out for a second. If you had to replace the word busy with the word scared, and I suggest you try this, then how would things change? Right? So if those 2 people who saw my talk yesterday, and by the way, they said, oh my God, this talk was amazing. I loved it. Oh, the way you framed your information and how clear it was, I just love it, but I'm just so busy right now. Now, what if they had said all that, but then said, but I'm just so scared right now. I'm just so scared to do something. Well, at least they're being honest with each other, or with themselves and with me. But of course they wouldn't, because their ego would get hurt. They were in front of other people. Those other people were men. It wouldn't actually matter whether they're men or women. But notice how that would change for the person. At least they'd be calling it out what it is. So I often find that people think if they just knew what to do, then that would be it. But actually, that's wrong. And if you just notice knowing really isn't that valuable, then you'd start to get that it's the behavior that matters most. Hey, everybody, this is RC Peck, and this is my weekend podcast. Hello to everyone. And the theme for this weekend, well, there's many themes for this weekend, but the main theme for this weekend is, does size matter? Should I be equally allocated across jumbo and large and mid and small and micro? Should I be allocated across different sized stocks? And most big box and independent and boutique advisors will say, oh no, you have to be diversified because that's what protects you. But actually, that's wrong. And diversification is a tax on your life. It is a tax on your security. It is a tax on your money. But it's not, and it's invisible. So you don't even know you're getting taxed because most of the people around you are being taxed. So with that, I want to just look at 2 time frames and talk about one specific type of stock, which is the size of stocks. And just look at 2 price charts. One price chart is going to look at the U.S. stock market, all the different size stocks from the Brexit vote on June 23rd. And the other time frame we're going to look at is from the beginning of the year, the first trading day of the year. So on the screen here, you see a price chart of 5 different sized groups of stocks. You got jumbo cap, you got small cap, you got the S&P 500, you can call that large cap if you want. You got equal weighted, and then you got mid cap. Now, equal weighted has large, mid, and small in it. And I colored the names the same color as the chart. So from the June 23rd Brexit vote, there's less than a 1% difference between all 5 of those sizes. Now, the one that happens to be doing the best is the jumbo cap, the Dow Jones 30. Yeah, and right behind that one, you do have small cap, which I find really interesting. So you have the biggest, most secure, safest stocks in this country leading, and literally 0.04 of a basis point behind them are the smallest ones, literally right on their tail. And then you go to the S&P 500, and then you go to equal weighted, and then you go to mid cap. But this is really interesting. This is what's so interesting about investing, because you'd never think, well, the super duper duper safe ones that are in the Dow 30 and those small cap crazy ones, they're going to be doing about the same since the Brexit, right? So what I believe that means is The people who don't want to be in the market and the people who are looking for yield are saying, look, if I'm going to be in the market, then I'm going to be in those super, super safe ones like J&J and Procter & Gamble. I'm going to be in the safe ones, which, those are the type of stocks that make up the Dow Jones. And then there's the other side of it that people are saying, wait a second. I thought Brexit was supposed to be the black swan. And by the way, black swans are not telegraphed for 18 months. I thought it was going to be a black swan and take the market down. It didn't take the market down. Hey, things must be better than people thought. I'm getting in, right? So you have both sides of the conversation. And this is really interesting. This is one of the many reasons why I love price charts. So does size matter? Of course it matters. Does diversification matter? Of course it does not matter. Now, is there a big difference? Let's call it a month since the Brexit vote. It's less than 1 percentage point between the best size and the worst size. So not that big of a difference, but it is important to know that you do not need to be in all 5 sizes. So now what I want to do is step back and just look at from the beginning of the year and look at the same 5 sizes and see what that tells us. So look at this. Mid-cap was the quote-unquote worst performing since Brexit, but it's actually the best performing since the beginning of the year. And the reason why it's the best performing is important. It did not fall as hard as small cap. Small caps fell the hardest during the Brexit vote and then got up and started moving higher. Mid caps did not fall as hard. Now, the 2 winners before were small cap and jumbo cap. But if you look at for the entire year, look what you have. You have mid cap and small cap, 2 of the quote unquote riskier type sized stocks doing best. And then right behind that is equal weighted. And that's an equal dollar amount in large cap, mid cap, and small cap. So that's super interesting. For the year, what's actually doing best is mid cap and small cap. So does size matter? Of course it matters. But you do not want to be diversified. Diversification is a tax on your future. It's a tax on your security. It's a tax on your portfolio. You just can't see the tax. And that's what actually makes it very expensive. So what is the takeaway? Well, there's 3 takeaways because there's always 3 takeaways. So does size matter? Actually, it does matter. And the price charts always tell you which size matters most. And it's not always the same size. This is not something where you change size every week or every month or maybe even every quarter. But it's something to notice that diversification will not help you. Okay, what's the second takeaway? Guys, follow the price, not the story, not the reasons. Should the stock market be going higher? Probably not. It ain't cheap. It's only going up because of cheap debt. The hundreds of billions of dollars that publicly traded companies, they're borrowing debt at super low rates and they're buying back their share price. So profit has been falling quarter over quarter over quarter. Revenue has been falling quarter over quarter over quarter over quarter over quarter over quarter. That's 6 quarters. So you can't follow the story. You have to follow the price. And I've said for a year that the only reason why the market would move higher out of this 24-month 15% channel is on the back of central bank intervention. And when the Brexit vote came out to leave, I believe the UK central bank is the 4th biggest on the planet. They came out right away and said, oh, we're going to have to ease. Right away, the largest central bank on the planet, based on the size of the economic area it oversees, which is the European Central Bank, right away they came out and they gave a lifeline to Italy. Now, why does it matter? Because 17% of Italian bonds are non-performing. Its 3rd largest bank in Italy has a 30% non-performing rate. To put that into perspective, the U.S. had a 1.5% non-performing rate on its debt in 2008. 1.5. Italy's got 12 times that. 12 times that. So the day after the Brexit vote came out, the ECB lent out $150 billion to Italy. So it is on the back of money printing and central bank easing. And companies continue to come out and to sell debt. And they're going to take that debt not to create new and amazing things, but to just buy up their share price. So look, the price is going higher. We have broken out of this 24-month channel and it is broken to the upside. That's what matters most. But really, really what matters most is your behavior. Guys, if you're not in action, get help. If you're not in action, knowledge is not enough. It's not enough. And it's okay if you're not in action, but it's not okay to not do anything about it when you're not in action. Hey guys, thank you for being in my world. This is just another step in helping you protect your portfolio and protect your future. Until next time, this is RC Peck. Hey guys, everything that my company is about is helping people get the security back again, is helping them get control back on their money again, is helping them get those freedom and securities and choices back in their life again to make sure that they're not a burden on their kids or their grandkids or their neighbors or their church. Yeah? It's the one thing people come to me for. They say, RC, you know what? I know what to do, but I haven't been doing it. That's fine. If you're sitting on the sidelines, this is the time I am now talking to you. Don't wait for that anxiety to go away. It's not. It doesn't for any human. That's not what you should wait for. And just get off the sidelines. And it's easy to do that. Just call Patty or email her and say, hey, I want to get on the phone with RC. Maybe he should just do it for me. Maybe he can just show me how to do it. But I can't sit on the sidelines. And I get it, guys. I've met a lot of people who got out in 08 or 09 or 2011, and they've still been on the sidelines. It's scary. I get it. A lot of people have run out of the runway, the revenue generating runway. They don't have it anymore. And so they're scared. I get that. So this is now your time to get off the sidelines, pick up the phone or email Pat and say, hey, you know what? Let me get some time with RC. Let me see how he can help me. Hey guys, thank you so much for being in my world. Have a great weekend, and I will connect with you next week.